It is. What are your tips for those first-time buyers getting in the market now, which is difficult?
Yeah, well, I think I'm going to go back to the last question about pre-approvals and time. It's talk to an expert, whether that's a mortgage professional at a mortgage bank or someone in the industry that can start to guide you on these things. Because the reality is most people don't realize you can buy a home today in California. There's probably similar programs in every state, but of course, I'm only speaking specifically to California just because I am licensed and know it. Between Cal HFA and other down payment assistance programs, you can virtually buy a home for little to no money down. That sounds like I said, little to no money down. And the definition of that is FHA, Federal Housing Administration, government insured loans as a standard have a minimum down payment of 3.5%. Well, that's already pretty low, 3.5%. But there are grant programs that give you 1.5 to 3% of that 3.5%. So you can buy a home for 0.5% down and things like that. If your income meets or the house meets in the location, those are the two guiding factors. Sometimes there's income limits on first-time home buyer programs or down payment assistance programs. But the key is go talk to a professional and find out if you're thinking, oh, I got to save 20% down. I want to buy a $600,000 condo for my first home. I got to save $120,000. That would be insurmountable for a lot of first-time home buyers. But if all of a sudden you say you only have to save $3,000 to $10,000 for a $600,000 home, all of a sudden that becomes a possibility. And especially when you start to throw in things like 401k loans, a very powerful tool, especially in California where incomes are high. You can take up to 50% or $50,000, whichever is less, it's a federal mandated number, from your 401k as a loan. No penalties, no fees, etc. So if you have $100,000 or more in your 401k, that means you can take the max of $50,000 as a loan from yourself. If you only had $50,000 in your 401k as vested balance, you could take up to $25,000 of that as a loan. That's a great source for first-time home buyers that people just forget. It's just off in their periphery and they just don't think about it, even though it's there as a tool. Gift funds from mom, dad, sister, brother, aunt, uncle. Gift funds are a very, very good way. And these are not the IRS gift laws. These just mean banking gift funds, which means you're getting that as a gift, not as a loan, and you don't have to repay it. So there's a lot of tools for first-time home buyers to show them you don't need that much down. And of that money down, even if you're putting 3.5%, 5%, 10% down for the standard conventional loans, for example, that you can use those from 401k loans and other sources, for example, where